Gobble, 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 gobble. Is it Thanksgiving yet? Because typically on Thanksgiving or right after Thanksgiving is when mortgage banks release the new conforming loan limits for the following year. But for some reason, we have breaking news today that these mortgage banks are stepping it up and releasing the loan limits earlier. They're not waiting for November. They've already released them right now. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and we post content daily on Instagram and TikTok. So don't forget to follow us on our other platforms to get up to date on mortgage tips. Also, this is an interactive live stream, so ask a lot of mortgage questions. So we're going to get into it. It is breaking news that mortgage banks are stepping it up and they're releasing the new conforming loan limits. Of course, mortgage interest rates are climbing and more buyers are slowly backing out of the market. So these banks are stepping in, changing the loan limits so that buyers stay in the market. Let me know in the comments below. Do you think this is a good thing or a bad thing to release the new conforming loan limits? Okay, so let's get into it. So lenders right now have decided to update loan limits earlier this year. Certain major banks have decided to update and back new conventional mortgage limits now up to 1,073,000. 1,073,000. Rocket Mortgage, United Wholesale, Synergy One, Home Points are the main four banks that have already released the new conforming loan limits. Of course, other banks have followed suit, but these were the first four that I noticed, so I want to give them their props. That's going to change the game for a lot of people. What will this new loan limit do to the housing market in 2022? The new loan limits will bring in another class of home buyers into the market. With more buyers in the market, it will keep prices from dropping and will allow buyers who are struggling to save a jumbo loan down payment to buy with just 3 to 5% down on a conventional loan instead. With less money out of pocket, it will allow buyers to also pay off debt and do home renovations or save or just save. A lot of you guys who were struggling to save a bigger down payment because inflation is rising. Since cost is rising, it's hard to save money. So because you can't save that jumbo loan down payment of 10% down or more, you would have to wait every year. And every year as you wait, purchase prices go up, loan limits go up, interest rates go up, and payments rise. So this is your opportunity to do that with the increasing of loan limits, okay? So let's check out the loan limits here. You have conforming loan limits for beginning of 2022 versus mid 2020. The standard nationwide conforming loan limit was $647,000. The max purchase price with the minimal down payment of 3% down was $667,000. Mid 2022, right now, the new limits $715,000. Max purchase price now $737,000 with just 3% down. As purchase price increased in 2021 into 2022, that mansion you wanted, you needed to come in with just 10% down. Of course, on a $700,000 home, you needed to come in with 70 grand. It was hard to get the 70 grand as inflation pushed up. Instead of coming in with 70,000, you can buy that $700,000 home now with just $21,000. I know what a lot of you guys are thinking. Oh my God, this is gonna crash the market. Remember, you still need to qualify with your credit, your income, and your debt to income ratio. Banks aren't just going to give you the money because you have the 3% down. They do require a higher credit score. they do require that you have a solid job and a low debt to income ratio. You can't do it with a government loan. You could do it with a conventional loan. So it's a little bit trickier to qualify with a conventional loan. So this is not a bad thing. It's just going to give more relief to buyers that were trying to buy their dream home, but saving that $70,000 is a little bit harder with the way costs are pushing up. Also, let's say you have the $70,000, but you only need to use $21,000. You can save that $49,000. You can pay off debt. You can pay down the rate. You can do a PMI buyout. There's more you can do with the money instead of tying up the 10% down. Cash is king. Always talk to a lender, come up with a game plan, and play with the numbers. Remember, if you are buying your first home, the number one factor you want to focus on is cash flow. If you buy this home, how tight is your budget? Can you maneuver around with that extra money, since you're only putting 3% down, to minimize your out-of-pocket and to maximize your monthly saving? Create that cash flow. It's really important that you do that. Now let's look at high balance for all the baller shot callers out there, right? In 2022, 970,800. So I'm talking about Hawaii, Alaska. Yes, igloos get expensive these days. You got Orange County, LA County, San Diego County. You got San Francisco, San Jose, and you got I'm kidding. I promise I wouldn't say that joke. But mid 2022, you're at $1,073,000. Now you can go with a max purchase price of $1,129,000 with just 5% down. Fam, 5% down. Of course, you can come in with a bigger down payment if you want, but now you can get a conventional loan. 5% down, 10% down, doesn't really matter. But now you can buy minimal out of pocket. You can eliminate debt. So instead of buying that home with about $110,000, you can buy without $50,000, $60,000. You can save that money. Right now, cash is king. If you buy a home, since down payment is minimal, eliminate that debt. Eliminate that 21% credit card. It might be about a couple $1,000. It might be worth it because you have that extra cash flow, since you don't have to, extra cash, since you don't have to eliminate, you don't have to use it for the down payment. Buy down your interest rate. Buy out the PMI. So many crazy strategies. If the seller is willing to buy out your PMI, now you have extra money for closing costs. If they buy out your closing costs, you have extra money to buy out your PMI. You don't need 20% down to get rid of PMI. I'm assuming on a 1.1 million, the PMI is going to be pretty pricey. So might as well have the seller pay it off or use that extra money and pay it off. And now you're in a better position. And when rates pull back, you could refinance and take the lower rate. So there's a lot you can do with this new strategy. I feel like with this new guideline, with this guideline releasing, it's going to flood in more buyers. Do you think it's fair? Like, why would the bank do it all of a sudden? Yes, keep it 100. They are getting desperate. Okay, they need to keep buyers in the market. They want to stay in business, so they're just jumping ahead and releasing being lenient on a guideline that will probably happen 2023. But what does that tell you about housing? If they're increasing the loan limits, that means prices are higher. That means even though there are dips in the market, nationwide, they're still expecting certain pockets to increase. That's why they released the new guideline. If they didn't feel like prices were too high or that they were going to come down, they wouldn't need to change the guidelines. But they're changing it anyways because they want to keep buyers stimulated. Now they can buy with less out of pocket. So here's the moral of the story. This does not solve the mortgage payment issue, which I know a lot of you guys are going through right now. But it will bring more buyers and retained buyers in the market who struggle with saving for a bigger down payment. So instead of saving for a bigger down payment, you can pull the trigger sooner than later, or if you already have the money, you don't need to use all that money to buy a house. Okay, so banks are doing this, like I said, just keeping it honest with you guys. They need to stay in business. So they're just being premature at releasing a new guideline or updating a new guideline. But remember, if they're updating it and allowing a higher loan amount, that means these banks and these institutions, they know that prices will remain high to a certain level. And they're just trying to create more opportunity for themselves to stay in business. Hopefully this information helps you out. Please leave me a comment below. How do you feel about the banks becoming lenient and increasing the loan amount sooner than later? All right, guys, please leave a comment. If you have any questions, we got some Q&A coming up after this presentation. And also, if you have not followed me by now, please tap the follow button, tap the notification button. Also, follow us on our other platforms. If you've been following me for years and I've brought you any value, do me a huge favor. Please follow me on my other platform, okay? Especially the Tickety Talkety. If you know you got TikTok and you're doing your flossing, just find the What's a Mortgage _ and don't forget to follow me, all right? Also, guys, if you found this information valuable, please like this video and tag someone you know that would be interested in knowing this information. If you're in Southern California, if you were in Riverside, San Bernardino, you had to come in with 10% down because the house that you buy was above the conforming loan limit. Now you can buy it with just 3% down. Yowza, right? It's going to really change a lot of people's lives. Let's get into some Q&A here. See here. Oh, take it over. Okay, Q&A. Chat. Oh, dude, cool, Andy. Sam. Thank you, Sam Fuga. Knowledge is key. Thank you so much. Maddie Acola, where you been, homie? You know what? I've been here. I just haven't been consistent back on Facebook Live, but you know, everyone on Facebook, you guys have been with me for over 5 years now. And you know, we had some ups and downs, some challenges with our schedule recently, but we will be doing lives more consistently again. We are restarting the Ultimate Mortgage Guide because there's a lot of new people watching. So in the next couple of weeks, we will be launching the Ultimate Mortgage Guide again. We're going to help you qualify to buy when rates pull. For some of you guys, you qualify now. Some of you guys, you want rates to pull back, but let's go ahead and prepare ourselves to buy when you're ready to buy. Everyone's comfortability level is different. So our goal is just to provide you the information so you can make the best decision for you and your family. All right. Marie, for example, 500,000, you will need at least $15,000 down for the down payment and 2% in closing costs. So about $25,000 out of pocket, Marie, you can buy a home. Okay. Right now, sellers are helping out with closing costs. If it was me, I would come in with 5% down and have the seller cover your closing costs and be done with it. And of course, most likely I probably wouldn't buy out the PMI right now because most likely rates will pull back within the next year or two. Then you can drop the lower rate, you know, so that's why I probably wouldn't do it right now. Hopefully I would not do the PMI buyout right now. I would probably have the seller cover my my closing costs or do something called the 2-1 buy down. If you don't know, guys, you need to check out the 2-1 buy down. It is a season right now where you can get the builder and the seller to cover your mortgage payment. They're covering a portion of your mortgage payment. Let's say your rate is 6.5. You're going to make the payment on 4.5. And the seller, the builder or the seller will make the additional payment on your interest on the 2% difference. And they're going to do that all through year one. They're going to make that payment for you. There's an escrow account that the lender has, that the seller covers that for you. You cannot pay for it yourself because there's something called high cost. You're going to have to use a seller's proceeds, which they're willing to do right now, to cover your payment. Use a seller to cover your mortgage payment. Ease into it. You still need to qualify in the full rate, but have the seller cover your payment 2% year one and 1% year two. So it gives you time. When rates pull back, there's no prepayment penalty. Let's say you got this loan. 8 months later, rates drop. Boom. You can refinance. Right? Do you get any of that other money back? No, you don't. The money that the seller covered, it's already been prepaid. So all you're doing is paying your low payment, and when rates pull back, refinance and grab the lower deal. That's what I would do in this market right now. You have previous mentioned that if we have someone in our home paying us rent, we can use that to help increase tax deduction. How would one go about that? Would it be required invoice or a written contract? So Jenny Wynn, I suggest you reach out to your tax person. It's called border rent. As long as you document the income, you can do a contract, invoices. As long as you document it and claim it on your tax returns, now you can also increase your depreciation. You can write off more things in the house, but definitely talk to a tax person. Okay, hopefully that helps you out. Marciar, let those billionaires buy all those homes. So I want you guys to know something else too, Marsar. Guys, everyone's like, oh, I can't wait till homes pull back. You know who else can't wait for homes to pull back? Cash buyers. So there's something called the demand zone, right? So there's a zone called demand. Of course, if prices go above demand, demand just sits there. But if prices pull back and hits demand, it's going to get filled. And most of these people who have these demand orders out are sitting there with cash. I've never spoken to more investors, more people with tons of equity sitting on the sidelines with lines of credit, more than the 3% down, more than the 5% down, with 20, 30% down to buy these properties. So be careful what you wish for. Yes, the times are tight. If you don't qualify, there's nothing you can do. But if you do qualify, be careful. There will reach a certain point where buyers, these cash buyers, will enter back into the market and gobble up these properties. Okay? Min, I don't make much. How do we even earn enough to buy a home when I barely make 35 to 40,000? Sophia, depending on where are you looking to buy? Of course, in certain places, it is expensive. If you make 35 to 40,000 and you're in an area where you cannot buy a home, honestly, you need to pick up a second trade or look into your career. What is the max income in your line of work or in your industry? Make a game plan to get there. If not, keep your current job and learn another trade or work a side gig. Home ownership might not be for everyone, but if it's for you, you need to think outside the box, Sophia, and make it happen. For me right now, as I am waiting out this market and I'm doing social media, we are still closing a good amount of mortgages, but I am also day trading. I am up at 5:30 in the morning to learn how to trade. Right, Matt, shout out to Stock Market Wolf out there. I'm trading with him right now and I'm getting better and better. So don't wait for your situation to change, Sophia. You can do it. You can change it yourself. You just need to think outside the box. And if you do want to be a homeowner, if you don't and you want to continue to rent, there's nothing wrong with renting. But if you want to become a homeowner and you don't qualify, you need to do research. You're on the cusp of breaking through. You just don't know it yet. Okay. John Anthony. What's going on, John? Just purchased a home in September 2022. Home was $550. I put 5% down. My interest rate 5.99. You got lucky, John, because you know that stuff like 7% right now. 6.875, 7%. So, John, you bought it with 5% down, 5.99. Just understand that when rates pull back, just be ready to rock and roll. All right. Hopefully that helps you out. What if still can't afford a house with $300,000 to $500,000? I need prices to come down. But so Maxwell, Scalvani Maxwell, if prices come down, where will mortgage payments be? And a lot of people aren't talking about that. Where are mortgage payments if prices drop to $300,000 to $500,000? Okay, so for prices to drop, that means payments are up. Does that make sense? When rates pull back, more buyers enter back into the market. So in 2020, 2021, when people woke up and realized interest rates were so low, people were jumping into the market and paying over asking price. So if you have that type of money sitting around, that's why I tell people, if you have 20 to 25% down, I would probably wait it out a bit, because your bigger down payment will offset the higher interest rates. And if rates drop, don't forget these big major institutions who are buying cash, they're borrowing that money at a lower interest rates from another bank. So trust me, you will see more and more buyers enter the market. Right now, it's because the feds have increased rates. If the feds pull back, there is enough buyers and enough appetite to gobble up property. Don't think if I'll know the market's crashing with rates pull back and no one wants to buy. If rates pull back right now, there's enough buyers. Okay. I understand everyone's situation is different. If you're not in a position to buy, if you need to wait it out, but you might need to think about a different location. because I see it pulling back, but maybe not at what people think or need to get their home. All right, hopefully that helps you out. Sam Fagua, what's going on? B of A, affordability community loan, is it worth it? So I have one buyer, Sam, who actually is on the, they're not my buyer, they're with Bank of America, but I have one viewer who's actually on pace to getting a home with the program. So the program does work. The house that has been chosen under the program qualifies. So Bank of America has done an amazing job at making sure the houses qualify under their program. Unlike another program, Cal HFA, they released this program, this forgiveness equity. No one qualified. That was the biggest, that's not say scam, misjudgment or bad judgment on with the program. But Bank of America, there are people who did get the house. Okay, might not be up your alley, but some other people it was. Archie, what's going on? Even if the banks raise loan limits, I think buyers will still be hesitant to purchase because of high interest rate. Archie, I completely understand. It's a new type of buyer. It's buyers who do make a lot of money, but because of taxes or inflation, they just can't save a bigger down payment, but they're paying a good amount of money for rent. So it's not a bunch of buyers, but it is a class of buyers that will enter the market. All right, Archie? How much down payment do you need on 500 grand? You need at least 3% down. Abdullah, never buy a home. I'm sorry that you will never buy a home. Mortgage rates are almost 7%. What will happen when they hit 8 or 9? I'm sure the market will cool off heavily. That crypto guy, I think there will be a correction, but remember, they're still not forced sales. Until the feds could create forced sales, we won't see a tumbling in the market. I'm not saying that can't happen. I'm a realist. There can be a crash, but there has to be forced sales to be a crash. Everyone who's selling their home right now, not everyone, majority of home sellers, they're not selling because they're forced selling it. They're selling because, hey, I got to gain equity. I might take an L for selling right now and take a high rate, but I want to sell. I have enough equity to walk away, get a better place, or sell and just move on right now. I don't need to buy another house. But there's not forced sales. What I mean is, in 2008, people didn't get 30-year fixes because they had stated loans. They couldn't prove income, so they couldn't get 30-year fixed loans. Okay, if they did, the interest rate was disgusting. So of course these rates adjusted, and people didn't qualify anymore. That's why they were forced to sell. Right? People did 100% financing. All these 100% financing, people cashed out to 100%. So they they tied up all their equity. So people were forced to sell. In this market, unemployment is still low. As unemployment increases, well, will there be home owners who got laid off and need to sell? Because people get laid off doesn't mean they're homeowners. They could be living at home with their parents, or they could be renting somewhere. But if they are homeowners and they bought their home this year, I think most likely they're willing to sell, right? I'm meeting you guys in the middle, okay? I'm letting you guys know they will probably have to sell. How many of them? I don't know. But if you bought before February 2022, there's a high chance your mortgage payment is less than rent. So you can take that property, rent it out, and weather the storm, or you might need to sell. So you have two classes, the ones that might need to sell because they want to cash out because they got laid off, or there's ones that they got laid off and their mortgage payment is more than their rent and they got to sell anyways. So until we see that happen, it would be hard to see the crash. That 8-9% will bring buyers out, but also it will bring sellers out of the market too. I don't know if you check the reports, listings are decreasing. People aren't putting their homes on the market for sale. Because even though they might be able to sell their house, they're not going to take an L and take an 8 or 9%. Hopefully that helps you guys understand that. Houses made for banks, not for humans. Then Abdul, then, hopefully you live somewhere where it's rent free and whoever you're living at, they're not paying rent either. Okay. Remember guys, if your rent is $2,500 a month with a 3% inflation every year, in 30 years, you're going to pay $6,000 a month for rent. But Abdul probably figured out a game plan to never pay rent or care about it. Okay. What's going on, David? Would ARM loans make sense right now and then refi later? Yes. David Baraha, if you can qualify for an ARM. Typically, it's going to be 10% down. The loan amount is probably going to have to be in the 600,000-700,000. Some of them might go to the 5, but 10% down or more. right? There are arms at 5% down, but rare, and they're not the greatest. If I'm going to do an arm 10 to 20% down, you might want to take a 10-1, a 7-1 arm right now. I probably wouldn't do a 5-1 if you're going to do it. It does make sense. Hopefully that helps you out. And then refinance when rates pull back. Day trading video soon. On Wednesday on Instagram, I am going to have the stock market wolf on. We are going to go over the economy in 2022. What's going on? What's going to go on in 2023? Also, he's going to share how he's been trading, what I've been up to. So just like you, I said it earlier. I think, what's her name? Let me see. What was her name up here? Let me see here. What was her name? Let's see here. Sophia. I'm doing other things too to make money as well. I'm not just sitting there taking it. I'm learning to trade. I'm going to have him on. All right. Hopefully that helps you out. I bought my house last year. When will I be able to get rid of PMI? If you bought it with an FHA loan, you're probably going to chill out with it because rates are higher right now. If you bought it with a conventional loan, when you gain 25% equity after 2 years, if you put less than 10% down, your PMI can be removed by just doing an appraisal. Make sure you have the equity. If you put 10% down or more, it might be 2 years with 20% equity. Call your servicer and find out the guidelines. Can you send me info on the B of A Los Angeles, please? Deanna, please DM me and I will send you the link. Hopefully that helps you out. I bought 5 years ago with FHA 4 3/4. When can I lower my payment? Should I wait in my PMI? Yes. Right now where rates are at, I would chill out on it. If you bought it 5 years ago, unless there's a bunch of debt you can consolidate, right? Then I would just eliminate all your debt. Your rate might go up, but you might have a lower payment. And then when rates pull back, you can refi one more time or wait till rates to drop, refi, cash out, pay off all your debt. Because for conventional, get back to 475, probably going to happen in a couple years, probably a year, 2 years. Okay. If you want to wait it out. It's crazy. The home I purchased was 550, appraised at 593. I'm telling you guys, in certain markets, prices are coming down. But in certain markets, it's not. Remember, real estate is local. Maybe before February or June this year, nationwide, prices were increasing or just flattening out increasing. But after I think July or August, June, July, August, as you know, rates push up higher, the Fed's got to do their job. They got to flatten things out. So prices aren't going up as much. But depending on certain areas, prices are still booming. 5.5 ARM program better than conventional. Bonnie B, I think it's a great program. If you can get yourself into a 10-1, I wouldn't mess with the 5. I would go 7 or 10. 10% down all day long right now. If you go under 10% down, you might want to look for a 2-1 buy down. All right, hopefully that helps you out. When do you think rates will drop? Rosalinda, rates will drop when inflation comes down. Right now, inflation's at 8.3. The one thing people aren't talking about, core inflation, right? Core inflation. Or just inflation, John, think about it. I'm gathering my thoughts right now. So shelter makes up 32.9% of inflation. If interest rates go up, then rent goes up. It's going to be hard for the feds to bring down inflation with rents rising. There are certain pockets where rents are coming down, but nationwide, rents are rising. So it's going to be hard, Rosalinda. But as soon as they can get inflation, I think, trending down, maybe under 5%, they might pull back. The feds are going to look at it every month, so they're not going to raise rates in October unless it's mandatory. November, December, there should be a rate hike. If they see that they've gone overboard, they might pull back. If they feel like they haven't gone overboard, they're going to keep raising rates until this inflation comes down. Hopefully that helps you out.
Zara Jimenez sent 200 stars and asked the question. Scroll a little bit.
Okay. Zara, what's going on? Zara Naret Jimenez. Can I use equity from my house to buy a second home as an upgrade and rent the first one and use a HELOC? So typically, Zara, if you use your HELOC to buy owner occupied, the banks frowned on that. Okay. But if not going to stop, I'm not stopping you, but I'm letting you know that if you majority banks, reach out to the banks and talk to them. Some banks might allow it. Majority banks that give you HELOCs, they'll let you buy investment property, vacation home, but they won't let you buy primary. Some lenders will. So definitely, if you want to see which lenders will, which ones won't, Zara, please DM us. There's only 6 companies I use for HELOCs. I don't do them personally, but of course, it's not about me and what I can do. I'll point you in the right direction. All right, Zara? But yes, certain lenders will let you, some of them won't. Hopefully that helps you out.
Thank you for the 200 stars.
Thank you for the 200 stars, by the way. I bought 2 years ago and thoughts with a 3 and an 8. Mike, you're sitting pretty. Wow, thank you so much for the stars. See here, what's the average cost for getting an appraisal? That crypto guide average cost is probably going to be between, depending where you're at, between $400 to $600 for a single family home. Okay, hopefully that helps you out. Hey, you look like you lost some weight already. I can see it in your face. Rosalinda, thank you for that. Really working on it. Who has the best arms right now? So if you're gonna go arms, pound for pound, if you're gonna put 20% down, that company Synergy One, they do amazing arms. 15% down too. But if you're gonna go 10% down, for me, I would probably go to oh my gosh, this is the bank of banks, okay? It's called Golden One Credit Union. Google Golden One Credit Union. Their arms on point, but they take forever to close. They might be like 60, 90 days to close, but hopefully your seller can bear that. Or if you're a jumbo, like let's say you're gonna go 10% down on a milli, 2 milli, 3, or not 2 milli, sorry, a milli to $1.5 million, 10% down, go to Partners, which is owned by Disney. Okay, hopefully that information helps you out. Hopefully, guys, I really appreciate everyone who watched, who engaged, and who commented tonight. I know I need to work on being more consistent on Facebook, but I will start coming back. Also, YouTube, thank you so much for the love, guys. Hopefully this information helps you out. If you did do me a huge favor, please hit that subscribe or notification button if you haven't done so. Also, guys, tag someone on this video that you know would help them out on their home ownership search. Oh, one question from Randy. Hey, Randy. Hey, brother. I've been in my home for 3 years now in Ontario. Family is growing and thinking of getting a bigger home. I used the VA for my first mortgage. Your advice into getting another home. I would probably refinance that into conventional, Randy, and use your VA again. Unless you have enough in your entitlement. That's what I would do, right? Refinance, pay the higher rate, and then use your 100% financing again. Keep your cash in the bank. Since you've lived in your property for so long, cash is, you probably don't have PMI, so it's still worth it. If you want help, Randy, please DM us. Guys, if you want help, you have mortgage questions, or you have a loan estimate, you want me to help you find a lender to beat it, you have a HELOC you want to help finding a home for, give us a call, 714-790-9697. Give us a call or send us a text message. To all the shy guys and shy girls, I won't bite, so if you want a text, I'm Gucci with that. If you have a loan estimate you want me to review to make sure you're not getting hoodwinked, do you know what hoodwinked means, Andy? That's an old school term, right? If you want getting hoodwinked or hustled, send it over to info@whatsamortgage.com. I can help you read it, or I can help find someone that will beat it. All right, guys, so don't forget 714-790-9697, or email your loan estimates or questions over to info@whatsamortgage. Know of any DSCR lenders? Yes, Richard, I know a lot of DSCR lenders. My buddy's mom, she's a huge DSCR lender, so please DM me. DSCR's changed, dude. You know what DSCR? You can buy a 4-unit with 20 to 15% down, when on conventional investment you need 25% down. What? Yeah, DSCR rates are higher, but so you gotta make sure it rents. You have solid renters in there. All right, hopefully that helps you out. Interest rates are high right now. It's discouraging. Hopefully they drop within the next 6 months. Big figuras. If you follow me on TikTok and Instagram, as soon as it does, I will let you know ASAP. All right, Stacy, what's good? This is my first time watching video. Thank you so much, Stacy. Really appreciate the kind words. Randy, you helped me out on my first home. Definitely reach out. Thank you so much, Randy. All right, guys, we want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you so much. Let me see one last one. J Mex, does FHA loan prevent you from refinancing in the future when rates drop? It doesn't prevent you from refinancing, but if rates are higher, then you can't refinance. Think about buying now if I can afford the monthly and just weather the 2 years. Yes, definitely do so. All right, I would definitely do it if you qualify. If you are buying right now, buy responsibly. Okay? Don't just buy. You got no money saved. All right? We want to end all our episodes again with our attitude is gratitude. Without you, there is no us. So thank you guys. Have a great night.